Now is the time to start looking at putting that cash that you took out of the markets by reducing risk and rebalancing portfolios. Take that cash now, put it back to work. You've got a decent opportunity here. Markets are very oversold, starting to see a bit of a turn up in relative strength. Here's what you need to know before the bell this morning. Markets, like I said, have a very, very sharp decline. This was the fastest 10% decline that we've seen in quite some time. And of course, that certainly got a lot of people on the edge of their seat. And we've warned about this before, is that, look, markets correct all the time. You know, markets all the time are going through some type of correction. And when they go through these correctional periods, then that's when investors all of a sudden get really concerned, right? When markets are going up, everybody's like, hey, markets are going up, it's great. When markets correct a little bit, for some reason, everybody gets all concerned. It's like, oh my gosh, it's a recession, it's a bear market, it's the end of the world, whatever it is. It's just sometimes the markets need to have a correction. And that's all that's been going on here as of late, is that we were extremely overbought on multiple bases. And again, when you get really, really overbought, you're going to get price corrections. And again, this is all that's happened here, is that we just simply worked off a very overbought condition in the markets. Now, we have to, as humans, as I've talked about before, is we have to assign a reason for this, right? Why, oh my gosh, why is this correcting? Well, it's because of a recession, it's because of this, it's because of that. Reality is just that markets were very overbought, and that sometimes you just have to have a reversion back to the means. And that's all that's been occurring here. We reverted back to moving averages. Again, you cannot have a moving average unless the price of the market trades both above and below that average over time. That's where the average comes from. So again, averages are like gravity. When you deviate too far above these averages, you're eventually going to have a correction. And if we look back at the markets over a very, very long period of time, guess what you see? Lots of retests of those averages over time, above and below that. That's just simply how markets work. And again, this is why it's very important to keep a focus on what's actually happening within the markets and keep a watch on where your allocations are. And this is why we regularly talk about when markets are very overbought. What do we say? Take profits, reduce risk, rebalance. It's like, well, Lance, you're always saying take profits and reduce risk. Markets keep going up, right? You're missing out. This is why you take profits and rebalance risk, because again, you're going to get these correctional periods. Now is the time to start looking at putting that cash that you took out of the markets by reducing risk and rebalancing portfolios. Take that cash now, put it back to work. You've got a decent opportunity here. Markets are very oversold, starting to see a bit of a turn up in relative strength. On Friday, again, we're not probably completed through this bottoming process just yet. What would be great here is to see this market get back above the 200-day moving average. We do have a lot of resistance kind of coinciding right here around 59.50-ish. So again, that's going to be a real challenge. That's the 50-day, the 20-day, the 100-day, all kind of colliding at this one area. So again, that's going to be big resistance. So again, you get a rally here. This is going to be a really good opportunity. Review your portfolio and say, okay, what was not working at the market high and what outperformed on the way down, and then look to rebalance your portfolio a bit. Again, if you had a bigger decline than 10% in your portfolio, this is a really good opportunity to go, how much risk am I taking? How much leverage do I have? What are the things I'm doing that are creating bigger downside risk in the markets that I'm comfortable with? Use that rally to rebalance that structure in your portfolio so you don't have that kind of risk. Because again, we're not through with volatility longer term. We're going to have more bouts of volatility over the course of the next year as the markets deal with tariffs and economic changes and governmental policy changes. Those are going to continue to weigh on markets. Earnings are too elevated. Those have to come down. So again, more volatility this year, as we've been talking about. Use a rally that we get here, whatever it is, to put a little bit of rebalancing in your portfolio. That's what you need to know before the bell this morning.